Alrighty, welcome back. I'm here with my good friend Michael Standard. He brings a really unique perspective to the industry, and I'm going to give you a little bit more detail on him in a second. But one of the things that you should be thinking of, which most agents don't, I mean, it took me a long time to figure it out, reverse mortgages. Now, I know that sounds crazy, and you probably don't have a license to sell them or to educate people properly on them, but if you can find a partner like Michael, it can be a game changer in your practice. The biggest way it's a game changer is because you're going to be able to help people with something that you're not necessarily directly benefiting from. And that's going to be a huge trust and rapport builder. So for instance, I'm a big believer in reverse mortgages, and we've used them with our own family, and we will continue to use them because I have a good understanding of how they work and the benefits there within. And then I started sharing that with some of my clients that were having some financial challenges. They didn't have enough income for retirement. They may have had like a small mortgage left over, or even those with their house completely paid off. They needed extra cash flow. Well, reverse mortgages are a great way to tap into the equity within the largest asset that they own. Most people you're working with, their home is worth more than their 401k IRA. Not everyone, but for a lot of people, it is. And reverse mortgages are definitely not for everyone, but for a lot of people, they can work out really, really well. I mean, just in our own personal family situation, we used a reverse purchase, and at my mother's house, we're looking to do a reverse mortgage on it once we have enough equity in there, which gives her this opportunity to have extra cash flow, a way to access some 100% income tax-free money to better enjoy retirement. And so I'm not going to be the one explaining it and how it all works because I am not the expert in it. But just like Henry Ford said, you don't have to be an expert in everything. Just have the people that are good at it do it. And that's why I refer all my clients to Michael, and he works with multiple people and agents all throughout the entire country. So, Michael, maybe you could share a little bit about your career and why you got into
Sure.
it, and the benefits.
Sure. Thanks, Roy. So I got into this in 2017 when all the rules changed, when they made it very safe.
Huh.
My background was I was a financial advisor, Bank of America Merrill Lynch for many, many years. I worked with seniors and had assets under management, traded stocks, bonds, did all that fun stuff. Went into the software industry, but then when I saw this tool, I thought, wow, why aren't more people doing this? Well, because they don't understand it. They don't get it. And I'm here to help those seniors get it because I can still remember when that little old lady walked into my branch at Bank of America and she said, hey, I've got my 401k. I'm retiring. I want to roll over. How much income can you get me? She had about $120,000. That was it.
Wow.
And we looked at it and said, well, you're going to get about $550 a month. And
Mm.
she's like, oh, that's not enough. And if I would have known, which I did know, that her house was paid off, she had an ocean view, it's probably $1 million house. There's another $500,000 she could put to work for her tax-free pension for life, right?
Wow.
So it's a great tool. And I hope to get into some details with you, but here's something that most of you agents need to know. Stats today, this is what, January 12th, 2026. The average amount of equity in seniors' homes, that's people over 65, is
Mhm.
$250,000.
Wow.
And 1 out of 3 still has a mortgage. So that means 2 out of 3 do not have a mortgage. That's a lot of equity to use. And to quote somebody we both love, Bill Brioche, he says, well, why don't you take the tax-free income out of your house and turn it into a pension for life?
Yeah.
And it's true. Or why don't you take the tax-free income or tax-free equity out of your house and turn it into a long-term care plan?
Mm-hmm. Yep.
Because 70% of seniors, what do? Lose their home, go to assisted living because no one talked with them about this.
Yeah, it's crazy to me. I mean, it has a jaded past, right? A very
Yes.
negative connotation. I mean, so do annuities, but luckily the tailwinds have been shifting up, and annuities are starting to become more acceptable. And
Yeah.
I know reverse mortgages had a bad taste in their mouth. Maybe you can share, like, why were they quote unquote bad in the past, and how did they become better in 2017 that you mentioned?
You bet. So they've been around a long time and since well, basically late 50s.
Hmm.
And one is banks are involved. We're involved in the old days, right? And banks
Right.
have to make a profit. They have to make a profit. They have shareholders. So they would charge pretty high interest, 8 to 11%, and they wouldn't let the client refinance it if rates went down. Okay, that was a no-no.
Oh,
Number two is you could take 60 to 80% of your equity out of your house. Okay,
wow.
80%. So let's say you take $80,000 out of a $100,000 home at 10% interest. Well, in 10 years, that's upside down. The loan's higher than the house value.
Mm,
So then, of course, we saw what happened in 2008 to 2012 with Obamanomics. People were losing their houses left and right. And when Jim would inherit his mom's Hazel's house and she had an old reverse mortgage on it and it was upside down, he filed bankruptcy
right.
because, right, what else are you going to do? So when Ben Carson became head of HUD in 2016, he said, we have to change this loan so seniors can use their equity to age in place in home care, right? And so the house doesn't go to Medicaid. Well, what happens
Yeah.
when Medicaid gets the house? Medicaid sells it for pennies on the dollar after the client dies. That's how
Wow.
it works. Because they don't sell it through a realtor. They sell it them, HUD sells it themselves, or the state does, and they lose their shorts. So the intent was to do two things. One, to insure it. So if it ever went upside down, the loan value is higher than the house. The government eats that difference, that loss. I'll just
Oh,
use an example. $100,000 home, the loan's 150. Mama dies. There's a $150,000 loan on the house. In this example, the market tanks, the house is only worth 100. The government will eat $50,000 of loss because they insure it for that. They insure the whole house. They'll eat the loss and
interesting.
give the house to the kids for $95,000. No one loses now. So it's insured.
Huh.
Secondly, the banks are gone. They won't let banks do this anymore. And there's only a few brokers like myself. I'm a wholesale broker, which means I can shop the nation and my fees are less than even a credit union. Okay. There's
Wow.
other retail brokers out there. I used to be one. It's too expensive because you have all that overhead and you get two or three products. Now I can shop the universe and make it easier for my clients or your clients as you're a producer to use their equity to age in place. What do they need it for? Well, that's up to you. I don't do anything with that. All I can tell you is this: when we close the loan, the funds go to their checking or savings account and
Hmm.
they can use it however they want. It comes out tax free. Talk about a great way to do a Roth conversion. And I've done them doing this. $1 million goes the next day from the IRA to the Roth. They take the money out of their house. It's tax free, right? Doesn't jack up their taxes, and
Hmm.
they pay the tax bill with it. So the
Oh, that's
million
very nice.
dollars gets invested right away. Doesn't take 5 years, doesn't take 7 years, right away. So they can take advantage of whatever the market's doing today or this week, so to speak. Because I
That's
know
a really
transfers
good
don't
point.
happen overnight.
Yeah,
Yeah.
I like that in the Roth conversion story because it's like, hey, look, here's an option. You got to pay this tax bill one way or the other. Where can you access money that's not taxable to pay this tax bill? Otherwise, you're double taxing yourself, right? So
Yeah.
that's a really good leverage perspective there. I think the biggest objection, at least I've come across in working with people, is like, well, I want my kids to have it. The way I high level explain it, I was like, they still have a right, or the option rather, or to buy the house if they want to, or they could sell it. I mean, just like a forward mortgage, it's not like they're gonna just forget about the debt. Maybe you can kind of
Right.
explain like the legacy aspect of it to help agents understand more, so they can talk to their clients more about like it's still your house, you're still living in it.
Yeah, that's true. And I'm going to go through that. Then we're going to go through a little PowerPoint and give some more details. Not too
Sure.
many details, but some more details. So what happens is I've done this multiple times. My clients don't live forever either. And I've done hundreds of these reverse mortgages. Now they're called HECMs or home equity conversion mortgage.
Mm.
So when they pass, and we're doing one right now, she called me from the hospice at the hospital and said, I don't have long, Michael. Can you help my son Rick sell the house? I helped her set up her trust, sent her to a lawyer. All the house was going to her kid, her son, who lived with her. He's a survivor of cancer, or cancer survivor.
Wow.
So he took, and then her other assets go to her daughters. So he kept the house. So what happens is when he sells the house, which he's going to close on at the end of the month, he gets all the remaining equity.
Mm.
So she had a $200,000 loan, okay, because she had it for, good gosh, 10 years or more.
Yeah.
So it grown, okay. And then he gets about 300,000 bucks. He gets all the remaining equity because one, they won't let the seniors take all the equity out anymore. It's all based on age. Two, he gets whoever's in the will gets the remaining equity. They have to sell the house and they have 12 months to do it. Or they can refinance it and keep it if they wanted to. It's up to them. But they get the option because the government doesn't want their house. The government doesn't make money on selling their house for pennies because they have to sell it for pennies on an auction website. But when the kids get it and they get a realtor, the realtor's, of course, going to want to make money and they want to sell it for the highest value they can get. So the kids get all the remaining equity. In that situation, he's going to do just fine. He's old enough. He's going to probably go do a reverse purchase
Mm,
and where he can put 50 to 55% down on on the next house and not have a mortgage payment either and save some
yep.
money and put it in his pocket.
Yeah, that's
So
awesome. Like we did that with my parents-in-law. We did a reverse purchase. I mean, I didn't. We just knew somebody at the time. And it worked out great because sometimes that was a better option based on the underwriting requirements of a forward. Because I know the underwriting requirements are much different. Because some
yeah,
people say, well, I don't have enough income for that, or my
that's
credit score is
true.
not that great. Maybe you
That's
could
true.
talk a little bit about like what are the underwriting requirements?
So the underwriting requirements for this loan is one of two things. I call it the cat food rule.
Hmm,
They have to have enough money in their budget to be able to afford cat food, pay their property taxes and homeowners insurance because they are still responsible to pay their homeowners insurance and property taxes.
gotcha.
They don't pay your property taxes, the county takes it. So we qualify them on their social security income or their pension. We don't even look at a portfolio. We don't
Oh
look at
wow.
their other assets. It just can they afford it? Because most people in retirement, they make about 18% of what they used to make in income.
Yeah.
And their
Sure.
expenses, because houses aren't cheap, you still have to maintain it, right? So
Right.
this is a way for them to easily qualify and not have to lose their home because one of the questions I train the agents to ask is this: do you want to leave your house to your kids? Yeah. Well, do
Yeah.
you have anything in place to make sure it goes to your kids? Like what? Like long-term care insurance. Do you have anything that you have a choice when you get ill or possibly get ill? And then the other is, do you have enough cash flow to stay in your home? And
Mhm.
if they answer no to that one, well, maybe there's enough equity in their home to turn into cash flow.
Yeah. Yeah, I mean, I've used this before from other people who have had a reverse mortgage done, and they're like, "We need to protect this house and this asset." Okay, great. Well, you can get a second to die life insurance policy. Very easy math. If you're an agent out there, just think of it this way, or even if you're a consumer watching this. I mean, this is YouTube, right? So, if your mortgage is 2 grand a month and you have an opportunity to do reverse and not have that mortgage payment, still going to make your property tax and homeowners insurance. But what if you and your spouse or just you individually were to own a life insurance policy that when you passed away would pay off the loan of the reverse? That way, the kids can quote unquote own it free and clear. And that life insurance premium is generally dramatically less than the mortgage payment. So now you're creating a positive arbitrage and still having the same goal.
Yeah, isn't that great? Another one of my clients, he basically knocked out his mortgage and he bought a long-term care policy for him and his wife. He's
Good for
actually
him.
using it now. He has stomach cancer.
Oh,
So he's
wow.
very happy he did this 3 years ago because now he has somebody come in and take care of him because his wife can't take him in and out of bed.
Wow.
Yeah, so it's been a blessing. And he just used that free cash flow to buy. He spent $900, so probably 500, whatever, divided up. You guys know better than I do anymore. But he now has long-term care insurance and he's using it.
Wow. Yeah,
Just
that's
knocking
amazing.
out his mortgage.
It's just creating leverage, and the mainstream media and a lot of advisors that just simply don't know about these unique strategies that can really help out.
They don't. And the two organizations that sell the most against it,
Mm-hmm.
realtors
Yeah,
and forward mortgage brokers who do traditional mortgages.
of course.
Because there's
Yeah.
no benefit in it if we do the reverse mortgage on the client's home.
Oh man, that's sad. That's
Because the
crazy.
client can stay in the house forever. They can stay
Yeah.
in it until they die.
Right. Wow.
And and then of course the mortgage, I had a mortgage broker. He was so happy one day he sold a new forward mortgage with payments to an 85-year-old. I'm
Wow.
like, you're sick.
That's
That is
crazy to
not the
me.
golden rule.
No, no. Wow, man. That. It's nuts. And that's why I love bringing content like this out so agents can actually get to learn about this. Because for me, as a newer agent, I had no idea. No one shared anything with me. I just had kind of a fun fumble and bumble along. And I was always very curious and hungry for more knowledge. And that's how I discovered these reverse mortgages and created partnerships like with you to
Yeah.
help a lot of these people out. And it's another huge value add. Like I have clients I've sent over to you, Michael, that I personally have not written anything because there's nothing for me to do per se, but I
Mhm.
still think that's value there. And then I get referrals from those people, right? So
Right.
somebody like yourself can make agents like us look even better because everyone else out there is just trying to look out for their own bottom dollar. Like, well, if I can't sell you anything, I'm going to move on, right?
Yep.
So it goes a long way. And if you would
It
like to
does.
go ahead, uh-huh.
Let me tell you two stories of very wealthy people. Okay, their financial advisor, basically one of them said, "Why kill your chickens? Why don't you just sell your eggs?" So the couple wanted to travel in retirement in the United States with one of these custom fifth wheels and custom trucks,
Yeah,
and they would had to rob about $300,000 out of their portfolio to get that. So, and the guy had a $2.5 million portfolio. He wasn't broke,
sure.
but he had $1 million home.
Yeah.
So the financial advisor says, "Hey, keep your stocks and bonds, let them continue to produce dividends. That'll be more money for your kids in the end anyway. Put this little reverse mortgage on the house." So the guy took the $300,000 and paid off his bills, paid off the travel trailer and the big truck. So now he's traveling all over the nation, enjoying his retirement. The portfolio is still growing, and portfolios today are growing stupid.
Yeah.
And he's doing great. Another one basically did the same thing, but he took the money, the client did, took the money out and gave it to his financial advisor
Mm.
who does options trading for him.
Mm.
So yeah, he's still making 70% and
I,
leaving more to his kids. So wealthy people do this too.
oh
And there's
yeah.
a guy right up the street here. His wife was in a care home for 2 years, evaporated all of their assets. All he had left with his Social Security. He didn't want to move, so we did this for him. And the agent he was working with, the financial advisor agent, took the funds and put it into a money market account for him and bought him a long-term care policy.
There you go.
So now he can stay in his home as long as he wants to.
It's funny too. People think, well, only the wealthy aren't going to buy annuities. Wealthy aren't going to buy life insurance. Yeah, they do. If you look at all the hyper wealthy, look at the Rockefellers. I mean, they've used all these different leveraging points and non-probatable
Yeah.
assets and creating arbitrage. I mean, if you really want to get nerded out on it, our economic system is called Keynesian economics. It's built on debt. I mean, you have to have debt. This is why the rich will never pay taxes because they just borrow the money, right? You're
That's right.
creating leverage in a system that's designed to be created that way, and it's all part of the tax code, right?
It
Everybody's like,
is.
"Oh, the IRS sucks. Tax code's bad." No, don't get me wrong. I'm not the biggest fan of the IRS, but the tax code is written in such a way that if you follow it, it will incentivize you not to pay taxes through legal and organized structures. I mean, this is just one
Yeah.
example of it.
Yeah, true. I'm going to share something just
Yeah,
real
go for
quick.
it.
Here's my contact information if you can see that.
Yeah, it'll pop up in a
Okay.
second.
Yeah. So there that is. Call me. I do a weekly training, go through all the details of how this works. You can be a producer, you can be a general public. I just give you the FHA and HUD rules. You have to be over 62 in most states. You have to own your house or almost own your house. It allows you to, they put a lien on it, so there's no payments. No payments.
Hmm.
And in the end, the home goes to your kids as long as you paid your property taxes. If you don't pay your
Yeah,
property taxes, it goes to your county. So,
exactly. You
what a
think
great
you own
way
your house,
to,
right? And don't pay your property tax, so you really owns it.
yeah, no kidding. So, what a great way to take the tax-free equity out of your house and put it to work for you, right? Or
100%.
invest it in something that's going to make your lifestyle better. And there's a lot of equity in seniors' homes that they don't know how to use it. This is a safe government loan, regular rates, whatever rates are in the nation, that's what the rates are.
Mm.
So it's not extra. So right now it's between 5.75 and 6.25, wherever it locks
Oh,
that day. Yeah, it's not expensive. And they don't pay any fees out of pocket except for counseling, which they have to go through counseling to assure the counselor, FHA counselor, and HECM counselor that they don't have dementia. that they're not being pushed into the loan and they're using the funds and they understand the loan. Okay. The other thing is they will have to pay for their appraisal. So all in about $1,000
Yeah,
out of
not bad.
pocket. And all the other closing costs are coming out of the loan. Now, let me say something real quick. It's cheaper to do a home equity conversion mortgage at about 6 to 8% total cost than it is to sell your house at 12%.
Hmm.
Okay.
Interesting. Yeah.
So the way I do this, I'm wholesale, so my fees are between 6 and 4, all in for my clients.
Yeah, that's not, I see a lot of people think that the loan rates are significantly higher. That was even my impression before I started really nerding down on it, is that
Yeah.
the loan rates are higher and the fees are all super expensive. But to your point, yeah, there's some out-of-pocket exposure, nominal compared to the benefit that you're going to get. And the rest of that, those costs and expenditures, they're wrapped into that loan where it's not necessarily materialized at that point.
Right. And the biggest expense is a 2% insurance fee. But
Mm,
that's the non-recourse fee that allows them to stay in their home. And if it goes upside down, the government eats the loss. Now, you're not going to get a life insurance policy at age 65 or 75 or 85 that's going to be that inexpensive. And that's
no.
basically what it does. It insures the home.
Yeah.
So your kids don't lose. It's a great product. People need to discover more about it. Need to put it in their fact-finding process. Do
Yeah.
you have your house? Do you own your house? Do you want to pass it to your children? Do you want to use the equity in your house to increase your monthly income? Just questions like that that seniors need to think about. They can't have this loan, they have to qualify for it. We don't give this away. FHA wants them to use this to stay out of and off of Medicaid and not to lose their house because their house, as you said in the beginning, is a very big asset. If they can pass that to their kids or grandkids, their kids or grandkids are going to be better off.
Yeah. Oh, yeah. 100%.
Yep.
Yeah, that's agents. You guys need to really think about this. And again, if you're a consumer, it doesn't hurt to at least explore the options. And at least, Michael, you're offering for them to call you, ask you questions, and you offered a free training call. I mean, it's
Yeah.
totally worth it.
It's about the golden rule. We want to be that person who can help that senior to
Absolutely.
stay in their home as long as they can and have as much income as they can and pass on as much as they can. That's the golden rule. We want to help these seniors do the
Yeah.
right thing, and most of them are ignorant. That's why we have you out there. Join my Thursday 1 p.m. Central training call here in Texas. It's right after Roy's call, and
Yeah.
I'd love to share with you how it works, go into more detail, and answer any of your questions.
Well, cool. Hey, thanks so much for being able
You
to
bet.
share that with us. And again, you guys, the people that we have a part of the Academy training calls, the YouTube, the live national conference, these are all people that we've personally worked with, right? So a lot of times in this industry or just other groups in general, people just pay to play. It's not like that here. There's a lot more to it. We want to vet people, and I have personally sent over my clients with my reputation over to Michael, and have had nothing but positive feedback to say. And so think about it for yourself. Even if you're listening to this in a different state, that's okay. He may not be able to help you in that state, but guess what? He knows other people that can, and it's a huge opportunity to help people. I mean, look at those statistics right now. It's massive, right? And you'll be amazed in the business that you can get out on the back end of it without even asking. It's almost like the best compliment to receive are those that you don't ask for. And this is a great way to do that. And when people see that you care and you're trying to help them with something that you're not going to get a direct financial payment on, it's huge, especially in the annuity space. Because remember, this is all about relationships. If you're just selling final expense or enrolling people into Medicare, you don't need to do all the kinds of extra effort. You should be anyway, but you don't have to. In the annuity space, it's going to take everything you got to become successful. So again, we appreciate everyone being on here. As always, we try to keep the calls within 15, 20 minutes, maybe 30. We're agents too. We have a short attention span. Totally get it. I hope this was helpful. Join our Thursday calls. Check out Michael's Thursday calls. They're going to be in the description link below. And we'll see you at the live national conference.
Have a great day.
Thank you.